Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 18th of July, Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. Going to go for our usual regular run through in here today. Take a look at the major news wires. What are the macroeconomic, fundamental, geopolitical, central bank events that are shaping financial markets right here, right now? We'll also check out the calendars in here, the macro calendar, the earnings calendar, and also the Fed calendar. See what's going on there. What's of interest going into today. We'll also take a look at some charts and what the potential trigger points are on the charts today for the markets you guys are trading, primarily the S&P 500 and the Nasdaq futures. So we're going to kick off in here. Just like this is the headline that kind of sums up the last 24 hours. Tech stocks wobble and deepening Sino-US chip war. So obviously we said yesterday we were already down yesterday anyway on concerns. Anyhow, the Trump trade, meaning probably more tariffs, blockades to trade with China. And that was also echoed by Biden in the last 24, 36 hours. So all of that weighing on the probably already overinflated anyway and overstretched tech sector, the chip sector. So we're seeing significant corrections. We've already seen those before the open yesterday, reflecting in the Nasdaq, and then obviously the major players in that space got damaged, and also then broadly tech got hit as well on the back of that. So we had, for example, Nvidia was down over 6.5%. ASML was down about 1% yesterday, 1.5% in here. So we had significant losses across the board, though. What else? We had Meta was down like 5.5%, Amazon down 2.5%. So Apple down 2.5%. So big tech got hit with the broader AI concerns, and the chip war obviously going to impact into those technology sector anyway as well. So that was one major driving force. The other thing we've really seen, not really having a significant impact right now, but potentially going forward, is Schumer and Pelosi mounting pressure on Biden. Apparently, from what I've read on the overnights in here, Biden now actually considering stepping aside. So that's been a big change, because he's been very much with the support of his family and inner circle. They've been very much pushing back on any chance of him stepping aside for another candidate. And it seems that with some senior Democrats in here, Schumer and Pelosi in particular in here, saying that, you're not going to win, basically, and he needs to step aside. So that could have obviously implications for us going forward. So we'll certainly be watching for that. On the calendar side in here, we've had some important UK data in here, actually showing a slight average earnings coming in line with expectations, keeping alive in here after the slightly higher than expected CPI data we had from the UK earlier this week, which kind of started to dash some hopes that we would get a rate cut in the summer. Keeping alive some of those highs. I think it's about a 40% chance now being priced in of a rate cut at the next Bank of England meeting. We do get coming up in just under 40 minutes in here the ECB monetary policy interest rate decision and statement. We get that in 42 minutes according to my clock here. And then after that, at 8:45 Eastern, we get the ECB press conference. No change is expected from the ECB in here. You can see in here, no change is expected. However, we're looking for signals that there is an expectation of potentially two more rate cuts to come from the ECB, having kicked off previously with their initial rate cut. Looking for two more rate cuts this year, potentially in September and December. So looking at any kind of language around that from the both in the monetary policy statement and also later on today at the ECB press conference, 8:45 Eastern. On the macro data in here, it's fairly light on the US side. In the initial jobless claims in just under 1 hour rarely moves the market. Fully fed in here, manufacturing rarely has a big impact on the market. More so we're going to be looking at, we do get Daly speaking and Bowman speaking later today, Daly and Bowman, which then brings me to the Fed calendar in here, where we get the meeting is in the July meeting is at the very end of July, the 30th and 31st, with the result delivered on the 31st of July, end of the month. And so the Fed goes into its blackout period. This is their blackout calendar. It's a week and a half, the Saturday, a week and a half before the meeting in here. So this Saturday is the last we will see, or this Friday, excuse me, really. The Fed go out and blackout from Saturday. So the Friday the 19th is the last meeting we're going to, the last day we have Fed speakers. So today and tomorrow, Fed speakers then embargoed up speaking about monetary policy. They do actually make speaking engagements sometimes, but they're not allowed to talk about monetary policy. So they might have other speaking engagements that they're involved in, but no speaking about monetary policy. So so we've only got today, tomorrow. So we will be watching out for what Daly and Bowman have to say today. Also, we obviously are still in earnings season. There's a big one this evening in here. We obviously had a lot of the big financials are already gone now, but we're starting to get into some of the other stocks in here of importance of sectors. And Netflix is a big one this evening. This is after the bell, so after the market closes. It's usually within the hour after the market closes. Sometimes it's around when the futures are open. I'm not sure exactly when Netflix results and earnings are due to be announced, but they are after the bell. And so, Netflix is obviously important. It's one of the FANG stocks. As monitored by the CNBC some years ago in here. So that's Facebook, Amazon, also Apple. We get two A's in the FANG stock. Facebook, Apple, Amazon, Netflix, and Google. Google obviously Alphabet. So and Netflix is often seen as a barometer of not just the US consumer, but also of the global consumer. Okay, so, and it's not just the headline numbers that we see here on the revenue and the EPS, the earnings per share. What is the usually one of the main pieces of data we watch for is the user base expanding. Okay, so that's going to be important to watch to see if the US and global consumer is still alive and well. Okay, and what you might see is in here, it could be counterintuitive. If we see a little bit of a slowdown here in Netflix, it might be seen as a positive. Not that the Fed are going to act on that, but it might be just another signal that the consumer is becoming a little shyer and a little bit more reserved. And if that's the case, it might actually be counterintuitive. You might actually see not a rally in Netflix, but a rally in the wider market. But probably not. It's probably we're not. Micro data tends not to react like that. It tends to just be very binary, up and down, depending if it's good or bad. So we're watching out for that consumer count in here for Netflix later this evening. Let's go to Bloomberg's 5 things to start your day. Having had that bad day yesterday on the tech side because of the US Sino saber rattling, or certainly from the US side on potential a chip war in here. We're getting a potential for a rebound in this morning after Taiwan semiconductor manufacturing, TSMC in here, posted some positive earnings in here, and they've seen a rebound there. So that's potentially a positive. And then again, focusing here on Biden facing intensified calls to bow out of the 2024 race. Fed speakers in here also got, so there's a few in here that I didn't see on the calendar there. So we've also got Goolsbee, Logan, and Daly in here. Final remarks before it's the July decision that's going into that embargoed blackout period in here. ECB decision we've already covered in here. No change expected, and we've already spoken about the UK wage growth in 40% chance of a reduction, having scaled bets to as low as 25% on Wednesday. So we dipped to a 25% of a rate cut at the next Bank of England meeting in here in the summer, and now back to a 40% chance at the moment. And some stuff here on OPEC. Expect the group's monitoring session next month to be routine, making no changes. So basically no news. There's some more on the TSMC hikes revenue outlook to reflect heated AI demand. So there was a positive there from TSMC. There's the ECB to hold fire on rates before key data arrives, as we've already mentioned in here. And there's more on TSMC there. Nasdaq futures jump as well because of TSMC results, broadly lifting semiconductor shares. And again, more on TSMC studies the chips, ECB, and Netflix. All right, so we've covered all of that. Let's have a run round of, and there we go. Europe waits for ECB signal as tech tumbles deeper. So let's take a look at a run round on the major Newswire, not the major exchanges globally. So the Nikkei was down 2.36% on the overnights in here, with the Hang Seng up 2/10. European stock indices rebounding after yesterday's losses. The UK FTSE 100 up nearly over 6/10 in here, 0.25% up on the German DAX, and over 0.5% here on the French CAC index. And the US indices having sold off yesterday. We're getting a slight rebound in futures in here, as we've already mentioned this morning. Once this loads up, so it's slight rebound. The Nasdaq leading the way back higher, having suffered most of the damage yesterday. Over 0.3 higher, over 1/3% higher on the Nasdaq, and just over 1/10 higher on the S&P 500. Looking at on the rates markets in here, little to add than what we've really been saying in here. This is not really moving in here. September nailed on now for a one rate cut, and now still a good chance we get, well, pretty much nailed on for 2 rate cuts now by the end of the year. You can see there's only like just over a 5% chance we only get 1 rate cut, because you've got the these 3 bar charts to the left. I'm not sure when I share. Can someone just tell me? Can you see my cursor when I do this? I think you can, right? Can you see my cursor? I'm looking on the screen. Oh, you can see my cursor, right? Yeah. So if you look at these 3 bars here, we've only got 5% chance that we only get 1 rate cut. And now we've got a 54% chance now that we get a 3rd rate cut as well. So slightly better than evens, that we get 3 rate cuts pretty much nailed on, that we're going to get 2 rate cuts by the end of the year. And that's reflected with the ongoing lower yields in here. So if we look at the US 10-year yield, we have had a slight back up to slightly higher yields this morning, but generally speaking, the trend is still down. So we're watching for this to eventually break further to the downside, and we've monitored previously this important level. We've kind of been flirting with this level right where we are now. We're kind of pushed below these lows in here previously. So there is real risk that we get a more significant push lower in here going forward. And then if we go to the in here, the 10-year continuing to push higher, we're taking out this important 111.13 level now on the US 10-year futures, and that continues to point higher. And we see that here. There's that 111.13 level from back here in, where were we? This was back in March. So we're above that level there, and now real risk that we we nudged above that yesterday. So real risk, even though we're backing off today, I think we're going to need to monitor a push back higher up here to higher prices. Lower yields would be a certain positive in here for stock indices. But on the index side, you can see in our reports, we've actually shifted to more negative. On the Nasdaq, the extent of yesterday's sell-off in here could not bring me to hold on to, even though I do expect there's a potential for a rebound today. I do see risk for a rebound. I see the value buyers coming in, but the fact that we've got lower low, lower high, lower low, a significant sell-off yesterday, we ended up closing right down on the lows. We're getting into all of this, getting down towards this important support area, down towards this trend line. So in here on the Nasdaq, we've actually flipped the outlook to more bearish in the trying early shorts, as it says there in the title, on the sort of the short-term outlook in here, but hanging on to, because you didn't quite undercut the support in here, 56.21 and a quarter here on the S&P, and we'll go and take a look at that on the S&P. So the S&P just hanging in above that support in here. There's that low there, 56.21 and a quarter, and just holding above there. And also look, you notice the way this 13-period EMA tends to work really well. We did undercut back here, went into consolidation mode, then launched from it. I played with it here back at the beginning of July, and then launched from it. And look, now we're flirting with it. We're held above that swing low. So they 56.21 and a quarter. The 13-period EMA, we just pierced it yesterday, and then today in here it's at 56.35 and a quarter, and holding above that at the moment. So if we start to undercut there, then obviously you can go and challenge 56.21 and a quarter, the swing low from last week, then the S&P starts to look a lot more vulnerable. At the moment, the S&P is holding in just about okay. The Nasdaq obviously looked way through this 13-period EMA, wiped out low support, lower low, lower highs, looks damaged in here. I do see a slight risk of a rebound today, but if the S&P starts to give up that 13 period EMA, we could have easily have a notable leg lower again in here today. So watching for anything we might get from the ECB this afternoon, guys. I mean, there's very, 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 very unlikely they're going to move rates, but just looking for the forward guidance on that. And then really it's going to be just if we start to undercut, as I say, I think if the ES undercuts that 13 period EMA, goes down to yesterday's low, 31.75, and it could quickly be down at 21.25, and then it looks quite vulnerable to the downside, and will no doubt pull the Nasdaq with it. And then don't forget, after the bell tonight, we have Netflix. I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you for the TGI Friday webinar tomorrow. Bye.